When Nikhil Kamath left school at 16, it was a bit of a gamble. But today, at the age of 35, he's India's youngest self-made billionaire. The online trading platform he set up with his elder brother 10 years ago has become the #1 trading place for retail investors in India. Zerodha has grown rapidly in the last couple of years to have 8 million customers, and it now handles 15% of Indian retail trading volumes. Now, Zerodha's success has tracked a booming stock market, with small-time investors rushing to get a piece of the action. Actually, India's Sensex index has risen 22% over the last year.
Hello everyone. Stock market, a game of fear and greed. Some people calls it gambling, and on the other hand, some people calls it a game of patience. In our today's video, we will not talk about stock market, but about the broker. The broker who never spent a penny in advertisements, but become the #1 broker in India. Yes, I am talking about Zerodha, a discount stockbroking app which was started in 2010 by Nitin Kamath and Nikhil Kamath. Now, Zerodha has more than 1 crore customers and more than 1,100 employees. If you look at the financials of Zerodha, then you will find that Zerodha is the most profitable broker in India. Before moving on to the topic, we have to understand what is discount broker. So, a discount broker is nothing but a stockbroker that charges little or zero commissions on transaction and doesn't provide any investment advice to the investors. On the 15th of August 2010, a discount broking firm took birth as the name of Zerodha. The founders of Zerodha, Nitin Kamath and Nikhil Kamath, are siblings. They had started this company together. The name of the company Zerodha is the combination of zero and Rodha. As you know, zero means nothing and Rodha is a Sanskrit word which means barrier. That means there are no barriers between the investors and the market. Zerodha contributes over 15% of all Indian retail trading volumes. The co-founder of Zerodha, Nitin Kamath, at the age of 17, got introduced to the stock markets by his friend, and since then he started trading. Before establishing Zerodha, he was working in the call center at the night and he used to trade during the morning hours. He made a good chunk of money by trading in stocks, but he lost all the money during 2001 and 2002 when the markets crashed. Eventually, he joined Reliance Money as a sub-broker and made a lot of money by adding big clients to Reliance Money. Nevertheless, again, he lost a significant amount of money in the second market crash. In the middle of the global financial crisis in 2008 to 2009. After trading full-time for over 10 years, this maverick decided to become a broker when he thought that the time has come to provide a different kind of stockbroking services. He felt digitization and online user-friendly platform are the need. Nitin Kamath also observed that the reason why the young generation is not willing to start trading is because of high brokerage charges implemented on their transactions. Before COVID pandemic in 2020, there were only 1% people invested in stock market, and after COVID, there were a huge rise. Now, there are more than 4% people investing in stock markets of India. For Zerodha, from the financial year 2019 to financial year 2022, there was a drastic rise in active customer base from 9,81,000 to 62,77,000. In the financial year 2020, Zerodha stood with the revenue of Rs 938 crores with the profit of Rs 424 crores. And now, these numbers are way ahead because in the financial year 2022, Zerodha's revenue was Rs 4,300 crores with the profit of Rs 1,800 crores. One more interesting fact about Zerodha is that Zerodha is now almost a $3 billion startup without taking a penny from outside investors. Nitin Kamath and his family is now the 63rd richest family in India. Nitin Kamath also gets a salary of almost Rs 100 crore per annum. It's all were the facts and figures of Zerodha. But now it's time to dive into the deep and find out what makes Zerodha so successful. What was the strategy used by Zerodha that big traditional firms could not understand or replicate? The answer perhaps lies in its blue ocean strategy. So let's understand what is blue ocean strategy. The blue ocean strategy is about helping your company to gain uncontested market space separate from all other similar businesses. These new spaces are described as blue oceans. In other words, the blue ocean strategy represents the simultaneous pursuit of high product differentiation with low cost, making the competition irrelevant. Zerodha used this successful solution and customized it to the Indian markets, addressing the main points of the existing services and providing an attractive option to the investors. It also addressed the non-customers of the industry. It was able to not just cater to the needs of the existing investors but also to create a value offering for the previously untargeted buyer groups. At the same time, it was able to lower the commissions charged. Earlier, investors suffered from a lack of transparency related to costs, paying for services not required, having little or zero understanding of how the markets worked, and daunting fee slabs for the services offered. While this group was Zerodha's first target set, it also wanted to focus on the non-customers who remained unserved. These can be organized into three tiers. First would be the budding investors who were aware of the options but who could not afford the current offerings, and those who were trading but were unhappy with the current offerings in the industry. The second would be the risk-averse ones who believed in long instruments like fixed deposits. And the last would be unaware ones who do not know anything about investing. Moving everything online reduced the costs of offline branches. It increased the speed of trading and executions using technology. It reduced the fees charged to the investors. It has started different financial literacy programs like Varsity and Trade-in Q&A, a forum for traders to ask questions. It created several new features like automating fund updates and Kite, a self-service broking platform. It also bought advanced trading tools like PI and Q for chatting and analysis. To solve the problem of awareness, it made a book called Rupee Tales that educated children about financial investments. Zerodha's main attraction has been its pricing model. The registration fee was minimum. Zerodha came up with a flat slab of ₹20 per deal. It removed complexity and increased returns, leading to a massive number of customers' registration. For long-term equities trading, they opted for zero pricing. The competition could not react to this move due to high operational expenses and verticalization. The Kamath brothers saw Zerodha of 2010 with a future like Jeff Bezos' Amazon in 1994. This brings me to the conclusion part of this video. What Zerodha started a decade back as a lone warrior is now an arena with new competitors rising every day. Today, there are about 15 major players in the Indian brokerage space. The significant ones are Upstocks, Angel Broking, Grow, and ICICI Securities. All together holds about 41% of the active clients. While Upstocks and Grow are similar to Zerodha, Angel Broking offers offline services also. Discount broking services are now facing stiff competition from new entrants like Paytm Money, which is resorting to price wars. The future of discount broking is rife with stiff competition, but the market is still a blue ocean. Indian equity investors are just 4% of the total population, whereas China has 12.7%. The race in the Indian market is to get those new investors on board. If Zerodha wants to continue leading in the market share, it needs to again get to the roots of the new investor behavior, just like it did a decade back, and expand its market boundaries. Thank you so much everyone for giving us your valuable time and watching our video till the end.